On today's Hot Sheet, I'm discussing why 6% rates will reignite the housing market, Cotality's homebuyer report, and weekly unemployment data. Today is Thursday, August 7, 2025. I am Byron Lazine, and the Hot Sheet starts now. Live from Naples, Florida. I am back for now, of course, for the foreseeable future as well. A pleasure to be joined by all of you. Let me know which market you are tuning in from here today. It's a pleasure to be with you and close out the Hot Sheet week. It's the only live Monday through Thursday when the markets are open housing show on the internet. There's a lot of stuff still going on economically. Looks like we're going to have a shadow Fed chair here pretty soon. Looks like we even have a potential civil war going on at the Fed. If you're following that, there's a huge divide happening over there at the Fed. And I think it's right now, 40 days out, seeming like a certainty that we will finally get a cut. You're going to start to see former Fed chairs and former Fed governors come out and say they might need to do two cuts. One cut might not be enough. And so when you're seeing, past players in this game question what the Fed, you're getting questions inside the FOMC. It's going to continue to build this case that we need lower rates, all due to, obviously, what many are concerned is a weakening job market. And if we get lower rates, we'll get this number to continue to improve. Mortgage applications have improved for multiple weeks, almost 30 weeks straight on a year-over-year basis. So not on a week-to-week basis, but 27 consecutive weeks of positive year-over-year data. Okay, that's where the mortgage purchase applications have gone. 14 consecutive weeks of double-digit year-over-year growth. So it's substantial growth. Now, we get to 6%, this number gets even wider. We hit 6.57, of course, on 3 days ago. That was the lowest level we've seen all year, 6.57 on August 4. 6.58 the following next day, and then 6.57 again yesterday. So we're still at 10-month low, year-to-date low on 30-year fix. Potential for momentum now to keep going here in the right direction, which is to the downside. You'll see builder confidence at 6% move up. Look where builder confidence is today. They don't feel good about the next 6 months. They don't feel good about the housing market index. They don't feel good about sales. They don't feel good about prospect buyers. But when rates approach 6%, we'll see it in the data. So be looking over the next couple months. If we hang around 6.5, if we get closer to 6, they'll start to feel better, which will, if they feel better, here's the catch. If builders feel better about where we're going with rates, then you'll start to lessen the risk of a residential construction layoff. Right now, that is one of the big concerns floating around this economy. We showed the chart the other day. Our residential construction workers, employees, about to start getting the axe, because every time that happens, recession follows very soon after. If we can get builders to start feeling better, construction to start feeling better, and that's only going to happen with rates. That it's a rate sensitive deal. Okay, they're reliant on rates. Why do I hit so hard back on all these people on the internet? We're 5 million homes short to meet demand. Investors should stop buying homes when they don't even own many of them. We need to get more homes. And I agree. Okay. We need more inventory. But all of a sudden we have it now and these homes aren't selling. because it's an affordability deal. And the soonest approach back to affordability that we can have is impacting the rates. Okay. So if you really want to get to see some of the inventory, 10 months of inventory for builders can't sit on 10 months of inventory for too much longer. If you really want to see things get at a healthy level and the economy not go in the tank, we got to get rates down. Okay. It's going to tell us something in the mortgage applications. We start seeing those increase even more than what we've seen. We're gonna be able to track this in builder confidence, and if we get to 6%, here's a random number, but you could see existing home sales like they were in 2019 around 5 million. Okay, existing home sales in 2019 were 5 million, where we've been hovering around the 6 million, and 6% could get us a lot closer to that. It's a million more sales. 2 million more sides, of course, the way the real estate market would think about that. All right. 6%. It'll open up the floodgates every time we get close to 6%. We just seen in the last week too. We've seen more buyers into the market. We're just at 6.57. 6%, huge tailwind. All right. Huge news for agents. 75% of buyers say their agent was helpful. So a buyer who slows down is rarely indecisive. They're paying attention. The job of the professional is to understand what that pause is trying to say. So Cotality, CoreLogic's new brand, did a house to home report. 75% of buyers say their agent provided helpful guidance, but only 8% felt confident after finding the right home. Okay. While 63% preferred a human over AI, just 7% described the overall process as straightforward. This is, trust me, the better AI gets, if only 7% of buyers feel like the process is straightforward, this is where AI eats into the agent space. Okay. Straightforward plan, straightforward process. Talked about it on the Real Word podcast earlier this week. You can go check it out here on the main channel, on the YouTube channel. Like the big players spending the big money, the Rockets. My team in Connecticut's got 2 deals right now with Rocket. We haven't seen really any of them. 2 Redfin, 2 Rockets. The customers who feel like they're getting an all-inclusive digital experience and that it's straightforward, are they going to tell their friends about that? Or are they going to say, well, dude, so-and-so in town, if you work with them, they're going to drop pie off in November. So I don't know, pie. I mean, the pie's pretty good. Like, everybody's got to get on this page here. Digital experience, straightforward process, documenting what you do. These are the things that are going to be really important as AI continues to move into the space. Buyers say guidance matters, but it's got to be timed right. So what matters most? A short, clear reminder about next steps when things got overwhelming. These often too often come when they're asked of the agent. They're not presented without the ask too often. That's a problem. That's an opportunity for AI. It's an opportunity for these really big companies that are spending really big money on the space. Okay. I mean, 7% giving pause. Hey, I just didn't find the process straightforward. I thought my agent was helpful. Like they knew more about the process than I did, but that's a low bar to jump over. Oh, they've done this before and I never have. So they have a little bit of experience, but I didn't feel like anything was straightforward. I felt like I was kind of flying by the seat of their pants a little bit, and they just kind of dragged me along. People don't want to be dragged along. They want to be a part of it now. Expect the unexpected. Top changes in expectations for buyers. Expectations prior to purchase, 53%. Stay in budget. Expectations post purchase, 60%. The process to be stressful, top changes in expectations, 46%, and 60% post purchase. So that changed big time. Hey, it was more stressful than I was prepared for. My real estate agent to guide, those are both under 50 in the high 40s. To make multiple offers before, post purchase, the expectations go way up. Okay. They've been through it. Maybe they weren't shown enough multiple offer situations up front. Sacrifices, 70% post purchase, like versus 33% pre. Closing to take a long time, 78% post, 31% pre. Technology's role in the process, 52% post versus 27% pre. To find a home quickly, 72%. Their expectations changed there post. Listen, this is a really lengthy report from Cotality. Okay, it's 24 pages. I've got it uploaded into, so if you want to just grab it quickly, if you're a BAMX member, put it where I put all the notes that we work through from the hot sheet, every single one of our templates, the slides that we use here. Here, I'll just go to today's 8/7. Every slide that we use today, as well as the entire report and all of my notes for the show, all there. So if you want to grab this report, there's a lot here to, one, learn from, two, prepare our clients for what's coming. Tweak the offering, show the timeline. Every BAMX member right now has full access to Mosaic. The Mosaic platform is designed, and listen, you just go into the classroom, jump into, you get Zudilio as well, jump into Mosaic and start using this platform, client experience platform. Inside the software, it gives you the timeline that sellers or buyers rather are talking about, the one that they need. It's in their buyer template guide too. It's right inside of BAMX. So go to school.com/BAMX to make sure, hey, I've got the easy stuff knocked out. They're talking timeline. 7% of them didn't know what the heck was going on next. Just jump in there and grab that. It's all there for you. Okay. Here's something, buyers who felt comfortable throughout the process. So the segment of buyers who felt comfortable throughout the process told us they were more likely to say they would return to using the same professional. Yet comfort, what does comfortable mean? It's unlikely to be a metric commonly considered or used in the industry. It's a miss, right? Comfort consistently ranked above both loyalty and convenience as a predictor for professional reuse. Like, I was comfortable, I'll probably use them again. Time of the moment, spur of the moment. Sure, nice thing to say. How often does it not happen? So real estate agent comfort level was 80%, convenience 47%, loyalty though 42%. Oh, push comes to shove, I might not be I'm comfortable. I just flew Breeze Airlines last night. I'm comfortable on Breeze. I used to be a dead loyalist to Delta. You couldn't get me off my, I would take a layover in Atlanta to fly Delta, to get my Delta status, right? And then I realized that, wow, there's some really nice direct flights. These flights are pretty comfortable. They're pretty clean. And when you sit in the front, it's the same seat as a Delta seat in the front. Like they're identical. The seats in the middle are identical. Like all the seats match up. I don't drink bubbles on a plane unless it's sparkling water. So I don't need that. I'm pretty comfortable on Breeze. I'm not loyal to Breeze. If something better comes along, I'm doing it. I still fly Delta today. I fly American when I go to Caribbean. It's very comfortable. Use the points, fly American, and sitting pretty. I like convenience. I like direct, but I'm not loyal, and it's really hard to get loyalty. I mean, Delta had it for me for a while, and when the convenience started to take a hit, like I'm comfortable on that flight, but the convenience starts taking a hit, I'm out. Like I got to find another solution. You start dropping off routes. Mortgage broker, the loyalties maybe higher than I thought it would be, but even lower than an agent, 31%. Homeowners insurance, 35. I mean, someday that's going to be like, that's going to be closer to single digits. It's just like the insurance thing is such a commodity. Just get me the best deal. Now there's some of it. I still use a local insurance agent, and there's a benefit to picking up the phone and all of that. But just where are things going with the cost of this stuff? Okay. Trust in tech, finding a home. AI tools already up to 23%. So I don't see that as, wow, that's low. I see it as 23%. And when you take a person at 48% versus AI at 23, you're like, wow, well, us people, we're still doing something. Well, when the customer says, hey, how about both equally at 29%? I tell you what, that Real Word podcast, I kind of lay it out like these guys aren't playing. These big companies moving into the space aren't playing, and you got to have a plan around this stuff. Mosaic, which every BAMX member gets for free now, can help you with that. So I'd consider jumping in there. All right. We got unemployment that we're tracking. I'll leave the rest of that report. If you're interested, dig in. I wanted to highlight a few of those key metrics. But we'll dig in now to this unemployment report. And we get this to wrap up every single hot sheet week. And based off of last Friday, I mean, I would say that, the concern would be, okay, this number is going back up closer to 250,000. We really do have a weakening job market, but so far, hard data shows us 226,000 for the past week. It's an increase of 7,000 from the previous week's revised level. So previous week was revised up from 218 to 219. So we're at 226. You don't really start looking at this as something that's really moving up till you get closer to 250,000 and above. We're not there. We're primarily basically back where we've been for the majority of this year on weekly unemployment data. Okay. 10-year coming in to start the day at 4.229. The chip tariffs that you heard about yesterday have broad exemptions. Dow's up 200 points. Stock market is loving everything that's going on. All-time high, all-time high, all-time high. 4.229, kind of creeping back up a little bit. Would like us to sit right at the 4.2 for a while. 657 on the 30-year fixed is where we ended yesterday. We'll see what happens today, and obviously heading into the weekend. CME Group and Polymarket both are at very high chances of a Fed cut in September. All right. Love to see you in BAMX, school.com/BAMX. Get access to all the stuff we talked about today. Get access every single Friday for our done for you content, as well as Sharon and Andrew Undum. Thank you to them both for doing the masterclass on pricing this week. Both of their classrooms are uploaded into BAMX. It's a no-brainer deal. It's like if you bought, one streaming service on TV and you got all the streaming services packed in. It's the only no-brainer deal in real estate. Helps you close more deals, and you can get into it. School.com/BAMX. We'll have a walkthrough here on the main channel, and we'll have a Knowledge Brokers pod tomorrow. Until then, guys, have a great day, and of course, toodaloo.